Retail sales rose less than forecast and from an already pretty bad level. Consumer confidence holds at an 8-month low, speaking of bad levels. And our next guest expects a slowdown for the second half. Joe Feldman is managing director and analyst at Telsey Advisory Group, which focuses on retail. Last year, institutional investor ranked Telsey #1 in specialty stores and department stores, #2 in apparel and footwear. He joins us now from New York. Joe, it doesn't look that great now. I mean, as we pointed out, or as Julie pointed out yesterday, it was already a pretty bad level to start with in retail. Why don't we see the consumer coming back? Is it all about the labor market?
Yeah, the labor market's a big driver here. But what's very interesting is you are starting to see much more of a bifurcated consumer, where that kind of middle to upper income consumer is actually spending. They're in the stores, they're spending, they're employed, they're not as worried about losing their job. It's that lower income customer where we're seeing a lot of the pressure. And you're kind of seeing that with some of the way the retailers have been reporting as of late. But without question, broadly speaking, slowdown in retail trends over the past several months, and it looks to be the case going forward.
And Joe, it's really bifurcated, as you mentioned, like among the retailers. I'm looking at Macy's as a stock. It's up about 21%. I know they had an upbeat forecast. Walmart's down 5%. Target's up 5%. I mean, so it's kind of a mixed bag.
No, that's absolutely right. And, you could argue that, between Target and Macy's, that they do cater to that middle to upper middle income customer. Macy's has done a great job with some of the in-store initiatives and the Material Girl line and all the different things they're doing. Target, they're catering to that customer that is finally back spending a little bit more in discretionary. They're seeing apparel spending picking up. Meanwhile, you've got Walmart, again, at that lower end, where that lower income customer is still under a lot of pressure, whether it's gas prices, out of work, and there's just continued pressure point there.
So do you expect, if we see the labor market improve, does the retail picture improve along with it? Are they correlated very closely?
They are. It's probably about the best correlation with anything related to retail sales. If jobs start to improve more than they have already, that will help. And I say more than they have already because the truth is there has been some level of job creation. It's just far lower than what anybody had hoped it would be at this point.
Hey, if you're looking for safe plays, I'm looking at Family Dollar. I love to watch this stock, Joe. It's hitting a 52-week high today. It's up 54% so far this year. So if you're looking kind of for a safe play, does it make sense to kind of steer towards these types of names?
Well, yeah, it's funny because on the low end, the one area that's holding up is the dollar store sector, because it's almost like the retailer of last resort. It's easier if you've only got a few dollars in your pocket to go in and get that, quick item to get back and those consumable items. And, Family Dollar in particular, with the private equity support that it has from the Nelson Peltz Group, that's actually going to help keep the stock price supported there.
What do you think as far as, is it pretty much a safe bet to say if they cater to the upper middle class or upper class customer, they're going to do fine, and if it's the lower middle class, they're in trouble?
I think that's the way we're looking at the market right now and the stocks. Yeah, that's a pretty safe bet. That at least trend-wise and the fundamentals, the way they're performing, is that's going to be the case.
Hey, Joe, the other thing is I like to shop. No big surprise here. But if you have an interesting trend that's out there, you get consumers into the stores. Is there anything coming down that you're seeing in the next month or two with back to school and holidays that's interesting that you think is going to get shoppers out there?
That's part of the issue at the moment. There's not a terrible amount, or not terrible, but there's not a lot of newness at the moment out there. It's all about jeans for back to school. I guess jeggings, the sort of jean legging version.
Yeah, but they've been around.
Yeah.
What? Since when?
They're kind of like really tight jeans. They're like leggings. Yeah, I get it. I'll catch Matt up later.
That's right. But you have that. But as far as tops go, there's not a lot of new interesting things going on with tops. You could argue that on the electronic side, there's some new things. With Apple's iPad and what's going on with mobility and the demand for smartphones, I think we're going to see some pretty good sales trends for those categories: mobile computing, iPads, and all those kind of touchscreen things.
Is that kind of immune? I'm just curious. The electronics, because we were talking about that with Suzanne O'Halloran, you have to watch the electronics. Do you feel like that's kind of immune no matter whether or not the labor market still looks pretty dismal?
Well, I wouldn't say immune because they are discretionary items, but for something like back to school, something that can enhance productivity like a computer or a smartphone, I think that's probably a little less, or more immune to the discretionary element.
All right, hey, Joe, thanks for joining us. Joe Feldman there from Telsey Advisory Group. We are going to take a quick